Good morning, everyone. So today we're going to talk about Trump's continuing threats to fire Federal Reserve Chairman Jerome Powell and why this is so dangerous. First off, this is not the first time Trump has threatened it. During the first regime as well, he was constantly at Powell, who, by the way, was Trump's pick to run the Federal Reserve. So that background for you as well. The Federal Reserve Chair and their Board of Governors is something that was set up by Congress. So similar to other areas where Trump is trying to just unilaterally cut people who are not who are independent agencies, this also would test our legal system, likely go to the Supreme Court. And Powell said he will fight to stay. But away from Trump's obsession with being an autocrat and having unilateral power over everything, let's talk about why this is not only a bad idea, but why it also is another example of how he does not understand basics of economics. So the first video we did in this series was about the reason why Trump really gave in on tariffs and extended for 90 days with most countries except for China. The real reason was the loss of U.S. exceptionalism. And you can find the video that describes it in full detail on my feed here. But what it meant was the yield on U.S. Treasuries was going up. And why was that? That was because there was a loss in faith in U.S. exceptionalism, or U.S. being a safe harbor. Since we did that video, something else has happened that is equally troubling. The value of the U.S. currency, which has also been viewed traditionally as sort of a safe harbor, U.S. currency, which gets used here, but also around the world, and U.S. treasuries are no longer viewed as being a safe harbor. Investors are starting to diversify. That means we have a weaker dollar, and it means rates go up. It has nothing to do with our economy here. It's that investors want what's called a risk premium in order to invest in the dollar or to invest in our treasury yields, our treasury bonds. And why is that unusual? That means that they want to get paid more. They want a higher interest rate to take on the risk of the United States, which in modern day era is unprecedented. Since World War II, we have been the stable currency, and our U.S. Treasury bonds were viewed as the most stable. So we didn't have to pay that premium. What happens when we pay that premium? We also discussed that in prior sessions, but basically it costs more for everything. When interest rates are higher, it costs you more for your credit card, for your mortgage, et cetera, but it also importantly makes our deficit a lot more expensive. If we have to pay, just throwing out numbers, 4.5% for a 10-year issuance of federal bonds, it's a lot more expensive than it was 4%. So our deficit and ongoing funding, because we run a deficit each year, becomes more expensive. So that's why we talked about how it was a really dangerous thing that Trump's tariffs have created this destabilization and that people don't feel as comfortable investing in the US. So now back to the Federal Reserve. The Federal Reserve has what's called a dual mandate, two things. One is to bring down inflation, and the second is to focus on employment. And if unemployment goes up, they need to take measures to help. And so up until 3 months ago, when Biden was still in office, we were sort of on this steady state of improvement, which I've discussed. We had taken our medicine. I described it as we had lost 9 of the 10 pounds we wanted to eat, and then we ate a crate of Doritos. But basically what was happening is slowly but surely, inflation was coming down. Last month's numbers showed a continued trend. It's hard to bring inflation down. But now Jerome Powell, and he spoke this week, and this is what triggered Trump this week. He spoke at the Economics Club in Chicago, and he explained what everyone on Wall Street knows, that first of all, we haven't seen tariffs like this, even Smoot-Hawley. The level of Trump's tariffs exceed Smoot-Hawley. So we don't really know for sure what will happen, but we know what happened in Smoot-Hawley. They were 1930. What happened shortly after. So his hands are tied in a sense because he has this dual mandate. And one thing that every economist will tell you, other than Navarro, who's a quack, is that what happens when you have Tariffs. They're inflationary. They bring up inflation. And that's another reason why yields are going up. Why are they inflationary? Well, US consumers have gotten used to buying a lot of things on the cheap from China and from other countries. Just think about how your life is going to be impacted when you can't buy that cheap chair that you wanted from China or other goods. It's going to raise the cost of things. Say you want to buy a European car. Say you want to buy a Land Rover or a less fancy car, a Volkswagen. Everything now is going to be more expensive. It's called inflationary. Inflation goes up. What else happens with tariffs? Well, small businesses are having a hard time. Our stock market is having a hard time. M&A is stopping. IPOs are stopping. Even new debt issuance is stopping. That slows the economy. When we have higher inflation and a slowing economy, it's sort of like the worst of all worlds that Powell is talking about. It's called stagflation. And so his hands are tied because one thing we don't know is what Trump is going to do next. And I suspect Trump doesn't know what he's going to do next, nor has his circle around him thought through, as we've discussed, the implications of these huge historic tariffs. So there's something called transitory inflation. In other words, it's just going to happen for a short time. And in that case, Powell can plan around it and say, yes, I can cut rates to stimulate growth. But what happens, which Trump keeps pushing him to do, when you cut interest rates, the idea is to stimulate growth. And what that does is it also feeds into inflation. So if you don't know in 90 days if these tariffs are going to be in place, in 90 days, in 30 days, in 2 years, how can you plan around that? If he lowered rates right now, all that would be doing would be feeding the fire, potentially. But who knows? Because Trump doesn't know. If he reads something or hears something from one of his friends at Mar-a-Lago, who knows what will happen on Monday? And that's why the markets are so crazy and unstable. But if he were to fire Jerome Powell, which he has threatened to do, and the Wall Street Journal is reporting he is actively discussing at Mar-a-Lago, including with a guy that he would replace him with, who has advised him, please don't do this. Bessent is telling him, please don't do this. And why? It would cause even more of a financial crisis for our economy. It would hurt our stock market. We would probably have a huge plunge in our stock market. It would further hurt the US dollar and yields. And so what would happen? Yields would rise, our cost of everything. So all the good that he is trying to supposedly do with lowering rates, it makes no sense. But what this again demonstrates, folks, we have given all the power to one person. Our Congress has abdicated their role of being the check on power, and it is actually Congress's responsibility to decide on tariffs, and they have abdicated their role there. So we have one man who, as I've covered in this series, has a very rudimentary understanding of economics and is clearly portrayed here. Like everyone on Wall Street is like, do you not understand that lowering rates is not going to be, it's not going to end up helping in the way you think it is. It's going to fuel inflation. And all that's going to do is raise the yield on US Treasuries. But no, does not get that. So it's important that we are all calling our members of the House and our 2 senators and saying you have to put checks and balances on this man. If he does fire Powell, Powell says he will defend himself. Powell's term actually runs out in 2026. But if Trump can't control himself for another year until that happens, we are heading to the Supreme Court. And we need our Congress to, again, this is an independent agency, the Federal Reserve, that very purposefully has been set up as independent, and the president is not supposed to meddle. The only other president who has tried to meddle is Richard Nixon. We know how that went. So please, again, call your members of Congress, tell them to put a check on power. But this is very dangerous. And more importantly, it's not helpful. And it's important that you all understand why. Have a great weekend.